So a 2008 style crash is about to happen again in real estate. And the goal of this video is to make sure that you and your portfolio are prepared for it. Now, I'm gonna go through two big pivots I'm doing, one as an investor and the other as a real estate entrepreneur, to highlight the changes that I'm making, give you ideas to what you need to do in this next market shift. Hi, my name is Chris Lopez, and I'm a local investor here in Denver, Colorado. And in the last market cycle, I became a real estate millionaire through investing and also built an incredibly successful 7-figure real estate business. So my first pivot as a real estate investor is I'm liquidating over 50% of my real estate portfolio within 100 days of this video being published on YouTube. Now, my next goal is to achieve a $10 million net worth, and this pivot by selling my properties high and buying low is going to help me get to that $10 million goal. Now, my second pivot I'm doing, and this is as a real estate entrepreneur, is this a massive business pivot where I'm shutting down a 7-figure part of my business to focus on the next big trend. Now, for the last year, I have been studying and making these decisions. When I go tell my friends and colleagues the pivots I'm making, they say, "Wow, you are crazy, Lopez." And then I walk them through the data and they're like, okay, it actually makes a lot of sense. So I'm gonna use the same 3-part framework that I've used for myself to share with you so you can understand the pivots I'm making and hopefully inspire you to go out there and change with the market. So the first part is looking at the history. What lessons can we learn from the 2008 crash? The second step is looking at the current state of the market. And the third step is looking forward. Where is the future opportunity? So let's dive into step one, and that's looking at the history. What lessons can we learn from the past? AKA, what can we learn from the 2008 crash? Before we dive into it, I want to preface this with this amazing quote from Mark Twain. History doesn't repeat itself, but it often rhymes. That means we're not gonna see the exact same thing we've seen in the past, but there'll be a lot of similarities. So here's a chart for the last 50 years of the Denver housing market. Now, this is great perspective. Now, I've highlighted the crash on the screen, and back then, the world was falling apart. And that does not actually look that big now. But what do we see afterwards? That massive appreciation, that massive rent growth that so many of us built wealth off of. Now, I'm showing you Denver data. Why? Because I live and invest in Denver. So make sure you use data from your local market, but a lot of markets follow this similar trajectory. I want to jump back to a very important lesson I learned before I got into real estate investing. And this is when I read Rich Dad, Poor Dad while I was in college. And it opened my eyes to being an entrepreneur and being an investor. At the time, I couldn't invest in real estate, but I became obsessed with financial freedom. And I hopped into an internet business that allowed me to graduate college not needing a job. I won't go into the details, but here's the punchline of it. I built a great business because I rode one of the early internet growth waves. This brings me to the first law that I want to share with you and impart in your mind. And this law is the trend is your friend. Now, I wish I could say all the stuff I did was right back then. It was not. I was just very fortunate to ride a massive growth wave. And I learned that lesson. If I just rode a big wave, it would make up for a lot of my deficiencies, a lot of my mess ups along the way. Now, the trend is a double-edged sword. I shared the success I had, but let me share the rock bottom I had by fighting the trend. So from 2011 to 2014, I consider this my entrepreneurial rock bottom. I call it my purgatory days because I was still trying to hold on to my old internet business. Even though the internet trends, business partner trends, consumer trends were against me, I was still holding on to it. I was afraid to leave that business and commit. So I was fighting the trend, and I was in a unhappy place in my life and also one of the worst financial spots in my life, and I burned through a lot of cash there. So I'm highlighting this because when the market shifts, a lot of people hang on. And if your business plan right now starts with when interest rates drop, stop right there. You're hanging on to the past. Those days of ultra low interest rates, they are over. And if you're prefacing what you're doing when rates drop, you're in the old mindset. Don't hang on like I did. You're gonna spend years being miserable and not achieving your financial goals. And this brings us to the next Lopez law. Find the one thing. Find the one thing that you have a competitive advantage at and that goes with the trend. I did that and I became a real estate millionaire. And that one thing for me was return on equity, learning how to maximize it. Now, if you want those details, check out this other BiggerPockets video I did where I jumped into the power of return on equity. But look, return on equity didn't just help me become a real estate millionaire, it also helped me grow a multiple seven-figure real estate business as well. Because I focused on the one thing, and that one thing rode the trend. All right, so as we wrap up step one, looking at the history, I shared some few key points for me, and I strongly suggest you go out there and do the same thing for yourself. Go reflect on the past, the good, the bad, the ugly, and then get those truths and then carry them forward. Now let's look at step two, which is the current market. So let's have a reality check. Are real estate prices about to crash? My prediction is no. We will not see a 2008 style crash in residential properties here in Denver and the vast majority of markets. Now, let's go back and look at this. We're not crashing. All that's happening is the appreciation party is over. This hyper growth, this double-digit appreciation growth and rent growth, it is over. All the data I am seeing, and you're probably seeing too from BiggerPockets, is that prices will be stable. So here's the punchline. The easy days of real estate investing, they're over. Used to be able to go out there and put a 20% down payment, have cash flow, have growth, and have a great investment. Well, those days are over. Now it's like a 40%, 45% down payment. Where there's opportunity is house hacking, room by room rentals, doing some Airbnb, very hands-on type investing. But in my mind, that's not the easy days of investing. Those are over. Which brings us to my next Lopez law, and that's past performance is no guarantee of future results. Now, that's not my line. That's on the bottom of every single mutual fund investment you've ever seen in your life. But I like that phrase because it makes me realize that, hey, what I've done in the past, even though it's super successful, it doesn't guarantee future results. So in the past, I was able to ride return equity and build a massive real estate portfolio. I was able to go out there and help hundreds of real estate investors grow their portfolio and many achieve financial freedom. But what worked then in the old regime of low interest rates is not going to work in the new regime of high interest rates. So here's my question to you. Look at your situation, look at your investing, look at your business. What worked well in the past and have a frank conversation with yourself. Will it work in the new regime? Let me know in the comments below. We looked at the past, we looked at the present. Now let's go to step three. Where's the future? Where's the opportunity? And the other way to frame it is not just where's the opportunity, but where is the pain? In 2008, there was a lot of pain for many homeowners and investors. At the same time, that pain led to a lot of opportunity for other people as well. So history doesn't repeat itself, but it rhymes. So here's my prediction. My prediction is that we're going to see a 2008 style crash in apartment buildings and some other commercial assets. Now let's look at this data here. So here is another chart of the Denver metro market, and that dotted black line is apartment buildings. So 5 units or more. Now you can see in 2007, 2008, 2009, they were actually pretty stable. They dropped a little bit in price, but multifamily did not experience a crash in 2008 like residential properties did. In fact, that's been one of its selling points for the last decade of how resilient it was in the last crash. But that was the past. Now, in the future, what do we see here? You can see in 2020, when interest rates went near zero, asset prices just jumped up, and then interest rates spiked, and now they're jumping down. Since we're able to buy properties at 2019, 2018 prices, that's the pain. That's the opportunity. Have you ever asked yourself or said to yourself, man, I wish I could buy properties like it was 5 years ago, 10 years ago. I wish I had a time machine and go back to that 2008 timeframe. I've said that myself, right? I mean, once we see the growth and success, it's easy to say, man, I woulda, coulda, shoulda. However, I've been waiting for this because I know history is going to repeat itself. We're going to see other market crashes. And I've been telling myself, hey, when it happens, I'm going to be prepared. I've been mentally preparing myself. I've been financially preparing myself. And when I see the market turn, I'm going to go all in and take advantage of it. So in times of change, in times of pain, in times of opportunity, you always want to remember the fundamentals, the basics. And that is buy low and sell high. how many times you heard that from stock investors and real estate investors. Well, that was one of the Lopez laws I've ingrained in my mind. So let's take that principle and look at the macro real estate market. Now in Denver, for about the last 15 years, we've seen major price growth, like most markets around the US. So what's happened? Prices have gone really high, and prices aren't going to fall. They're going to flatline and go up a little bit more is my prediction and a lot of other people's prediction as well. But where are prices low at? They're low in apartment buildings. They're low in other commercial assets. So we want to sell high some of the residential rental properties I have, and then move the equity and buy low over here to get into apartment buildings and other distressed commercial assets. So remember, buy low, sell high, buy low, sell high, right? That is the theme of it. So with that investing thesis stated, this brings me to my first pivot of where I'm liquidating. I'm selling a lot of my residential rental properties. I'm selling high so I can move the equity and buy low over here on the apartment buildings. So let me know in the YouTube comments, what's your reaction? What's your commentary to my massive pivot as a real estate investor? I'm selling rental properties, I'm paying capital gains taxes, I'm investing in apartment buildings and other distressed commercial assets. Am I crazy, or is that going to expedite my goal to getting to $10 million? So let's talk about pivot number 2. And this is me as a real estate entrepreneur. The shifts, the trends are so big on the real estate investing side, it's impacting me as a real estate entrepreneur. In this last market cycle, I built an extremely successful business that did multiple 7 figures a year in revenue, helping investors go out there and build a lot of wealth in real estate. I helped hundreds and hundreds of clients all through Colorado. I even helped quite a few go out there and achieve financial freedom. But guess what? That business was focused on the old regime. That was focused on the old growth patterns. Now, looking forward, just like what I've done in the past as an investor won't work going forward. Well, since that trend has changed, the trend for that business has changed as well. So I'm doing a massive pivot in that business so I can focus on helping investors sell high and buy low into the apartment buildings, into the commercial assets. Why? Because it's such a massive market shift. So I'm focusing my time and my money in the new market. So my question to you here is, what is your plan? How are you pivoting? What I don't want you to do is I don't want you to get stuck into like the Lopez purgatory, the Lopez rock bottom like I did 10 or 12 years ago. Number one, it was miserable. Number two, it was financially miserable. It hurt my checkbook a lot. I don't want you to do that because I see so many people out there saying, oh, when interest rates drop, you know what? That's the past. What worked then doesn't work. So look forward. So if this video has helped you, make sure you like, make sure you subscribe to the channel, but most importantly, leave your plan below and go out there and crush it.